What's going on, guys? I hope you are doing well. So, looking at the markets today, we've seen some dips. Again, Bitcoin's dipping, a lot of the gaming crypto coins are dipping. And I want to take the time in this video to explain how I'm approaching the markets during these periods, and also talking about how I'm approaching it when the markets are going up, because it's very, very important to understand what to do when the markets are going up, what to do when they are going down, and the kind of criteria that I follow so that you can hopefully learn something and take it away for your own benefit. But of course, none of this is financial advice. This is all just my approach and my personal opinion. So make sure you always do your due diligence and never listen to anyone, including myself, on YouTube or anywhere else on the internet or even real life. Do your own research, be responsible. I'm going to stop talking about that now. So quickly, guys, just before we get this video going, I just want to announce that I have created a Telegram community so that we can all begin to grow together. Community is such an underrated aspect and element of any kind of improvement, but particularly in the crypto space, because 10 people can achieve what one person can achieve in a significantly faster amount of time. And it's one of the best ways to get questions answered quickly and, see what I'm looking at and vice versa and all that sort of stuff. So this is something I'm really, really excited about. And hopefully it's going to be the start of something great. I've also got some incredible announcements coming in the next couple of weeks, months. And so I really, really do hope you're excited. And if you're interested in joining that community, it's completely free. It's just a community where we can share ideas and kind of get to know each other and have chats and stuff like that. Then check out the link in the description. And I hope that you enjoy the rest of the video. So Bitcoin took a dip. Now, I actually predicted this dip due to the fact that we closed below this level right here. And so it was expected that we came up here before we dipped down. What we're looking at here in terms of these green levels these are the areas that potential recovery could happen, and they are going to be my dollar cost averaging levels, not necessarily directly into Bitcoin, but there will be a small amount into Bitcoin. But it's more as a reflection as to the rest of the market and how that's going, because of obviously the correlation between Bitcoin and all of the other altcoins is fairly large. Now, from the open of today's candle, if we just measure this out, we have gone down about 9.38%. Now, if we just round that up to about 10%, and then we look specifically at the gaming crypto coins, which is my favorite, and we look in the last 24 hours, we're ranging from about 10 to 20, sometimes hitting a few 25% dips in the last 24 hours alone. Now, compared to other asset classes, seeing 10, like 25% dips, it's crazy, it's very volatile. And that's kind of one of the exciting things about crypto is there's a lot of upside potential, but you need to have a very, very strong emotional control in order to sit through those larger dips. They're a lot for anyone to take, believe me. And so when we are going down here, I do think that we're going to come down and reach this level as a minimum. And that's another 5.57% down here. And so if we translate how this dip in Bitcoin has affected the other metaverse coins down here, then I think that another 5% dip could easily mean that we go from that kind of 10 to 20 range to kind of 20 to 35% dip range. And if we go down further, maybe 40, 50, 60, 70, 80, these percentage dips are all possible. And one of the biggest takeaways that I took from my last video, which I highly recommend that you go and watch after this, where I was breaking down the past of the UFO and breaking down all of the news announcements that were causing exactly what pumps, causing exactly what dips, was the fact that price is a really, really bad indication of the value of something, because prices are driven so much by speculation. And these are things that I've known for a while, but going through that exercise in particular really allowed me to see that, for example, when we saw a 68% bear market correction, whatever you want to call it, on UFO over a period of a month or so, there was no major negative news that was creating that massive dip. And so the intrinsic value didn't really change. The only thing that changed was the price. And so therefore, it would have been smart during that period to just dollar cost average as it was going down. In a similar way, I believe in Bitcoin. I believe in the intrinsic value of Bitcoin, especially Ethereum and stuff like that with a lot more utility. You guys know that I'm a big fan of utility-based assets. And therefore, as we begin to go down dollar cost averaging, I am more than happy to assume that this is overall going up. And so I will just be dollar cost averaging, meaning I'll be getting in at each of these levels up to a certain percentage of my overall portfolio. I'm not just going to be putting in 5% here, 10% here. Oh, fuck it, I'm going to put 20% in here, 50% in here. Not doing that. Okay, up to a certain percentage, I'm managing my risk correctly, etc., etc., etc. All of the normal investing protocols. Now, on the flip side, I want to talk to you about profit taking, intrinsic value, and buying dips. So assuming we've got intrinsic value and presuming you've got some sort of process to identify intrinsic value, whether that's looking at the potential future industry value and looking at how the current company could fit into that marketplace, what its likelihood is of fitting in and being a significant portion of that industry value in the future, all of these sorts of things. I've got other videos talking about this, and I will also go into a lot more depth talking about this in future videos. And I've also got some really fun announcements and also like game-changing announcements to make in the next coming weeks as well, guys. So I do hope you're excited for that. And diversification. So again, diversifying between projects, not just, betting the farm on one particular project. That's stupid in any kind of investment context. But once we've got these things established, once we believe in a project and we've researched it and we understand it, which is very, very easy not to do because it takes work and it takes really kind of understanding something, then we can move on to these next two things. Because in fact, let me start off with buying dips. Because when we see the markets dipping like this, it's going to be very, very difficult to dollar cost average and buy into these dips if you don't understand the project, you don't understand what's going on, you just see the profit and loss, you're just in it for the money. And it's fine being in it for the money, but just play the game smart, understand what's moving these markets and what is influencing them, so that when these dips happen, you're not panicking going, oh, I'm at a loss, I need to sell this quick. You're thinking, okay, I believe in the intrinsic value of this company, I'm diversified between lots of different projects, okay, therefore I'm going to be dollar cost averaging into my risk, into my position. Now, the smart way to buy dips is dependent on you being available or having some profits that you've rolled from any kind of bull run or upswing or just general kind of positive returns in your investments. Now, if you're brand new and you haven't been involved in crypto at all, that's fine. Buying dips, we all have to begin by investing some of our own money before we can just begin investing profits and stuff like that. So just understand that if you have already had those bull runs and you have already had some profits, then it's just a matter of rolling that profit back into the dips. And I'll talk about this in a little bit more detail in just a second. But profit taking. So this very messy diagram right here, let's pretend that we got into this trade right here. We bought here and then we went up to this top, which was about a 23.62% gain. Now, there are two different scenarios here. Scenario one is the person lets it go all the way up here. They start seeing it come down and then it comes all the way down here, way below their entry point. And now their overall position, let's say they invested, 100,000 and now it's down to, 85,000 roughly when it's down here. Now, that's going to be a big sting. And I don't think that is the right approach. Instead, it is about, in the same way that we would be looking to, assuming there's intrinsic value, dollar cost average and buy the dips at periodic points or at specific news announcements or something like that, whatever that system is. The same thing should happen when we're going up. Because if we've gone up 23% here, person A may try and call the top and they're like, oh, I'm waiting for 50%. And then they have their kind of target up here and it just never gets hit. And so they've just completely lost out. And now they're at a loss when they're down here. Whereas the second person who carves profits off every 5%, they just take that extra 5% off, every five, with the 100 grand example, even if it was 1,000 example, they just carve off every 500 pounds, every 5,000 pounds. That is going to put you in a much better position because by the time you get up here, let's say you don't get all 23%, but you get like about 20% instead. Then when we go down and we're dipping below the entry price, about 17, 20%, we're not going to be at an actual loss here because we're going to be at break even because of all the profits we carved off at the top. And what I like to do is when I carve these profits off, I move them into stable coins in particular. About 90% of it I'll move into stable coins like USDC, USDT, and TUSD. And I'll have about 10% that I'll put into things like Bitcoin in some instances and Ethereum. But the vast, vast majority will go into these stable coins just because they don't fluctuate in preparation for times like these, when we have these dipping periods, so that then I can re-roll these profits back in to buying these dips down here. And so eventually the cycle will continue. As we begin moving back up, I'll begin carving profits up, carving until the next dip, and I'll re-roll those in. And this is how I like to ride the cycles. And it's very basic on the surface, but this will be really key information for those of you who, are a little bit new to the investing space in general, especially in crypto. But this is going to be a very, very powerful tool because it allows you to ride the cycles and understand what you're doing. You know, you sell the green and you buy the red, assuming that there is intrinsic value and diversification applied to that as well. And so this is going to put anyone in a very good position if they understand how to do it effectively and they have a plan to do it. And this is the simplest way that I've found to do it. Of course, there's ways to, you know, improve it and get a little bit more technical with it, but this is what it comes down to at the most basic level. And then when it comes to buying the dips, for me, I like to use technicals to understand where prices are likely to go and where they're likely to react from. I don't really want to go into too much detail about how I'm picking these levels in particular, but just see it as we've got a major low that created this high, major low that created this high, major low that created this high. And so when we begin going down, I'm looking for wick areas, specifically the base of the wick, because we're going up. I'm looking for prices to come and fill these levels if it's going to continue going down. And so prices could react from this level, they could react from this level, they could react from this level, they could react from this level. But when you truly understand that you have no way of being able to identify the bottom or the top, no matter how much analysis, no matter how many indicators, news announcements you digest, when you really, really understand that, it just becomes a game of playing the numbers, playing the percentages. I'm going to get in a bit here, get in a bit here, keep going deeper, bit here. And then on the flip side, what it should have looked like, let's say that you did get in kind of down in these sorts of areas here, should have been carving profits up this entire way. And when we begin going down, we just simply roll that back into these positions. You know, you roll it in here, you roll this in here, you roll this in here. This diagram is looking real ugly now, but you get the picture, okay? And that's just a simple way to do it. That's how I'm doing it. That is, for me, the most important way of doing it. And so, yeah, so I really, really hope that you've enjoyed this video. I do recommend you go and watch my previous video where I'm breaking down UFO and specifically looking at how and all the different movers of price, particularly from a speculation point of view, you know, the key pieces of news that I found were really, really influential in UFO and how that could potentially go forward into other projects, you know, such as listing on an exchange, liquidity locking, what all of those things are, all that sort of stuff. So I do recommend you go and watch that video. It was very, very valuable. But if you did find this video valuable, I'd appreciate you leaving a like on this video. And also, I should have mentioned this before. No, do you know what? I'm going to edit this back into the beginning of the video. So about that announcement about the community. So I hope you've enjoyed this video and I will see you in the next one. If you've got any particular ideas, anything that you'd like to see in particular, let me know in the comment section below. And I very much look forward to seeing you in that community and sharing ideas and all that sort of stuff. But yeah, take it easy, everybody. I love you and I'll see you very, very soon.